Welcome to Subramani. I'm going to talk about one of my limitations. One of my limitations is the inability to understand technology. Going to Google and searching for something is not technology. Making a phone call is not technology, right? Using my video camera to shoot or using my phone to shoot is not technology. I'm talking of cryptocurrencies. I don't understand cryptocurrencies enough to be willing to invest because cryptocurrencies in India is legal, but it is not legal tender. It is okay for you to buy, hold, trade, whatever. It is possible for you to do all that, but it is not legal tender. There is 30% capital gains tax or whatever tax you want to call it. So if you do a transaction, you make profit, you pay 30% tax, and like all lottery winnings, etc., you cannot set off any other income against it. You can't say, oh, I earned only 12 lakhs, so there is going to be no tax. There is going to be tax, there is going to be 30% tax on that, right? You can't invest in ATC and claim benefits and all that, so there is a 30% tax on cryptocurrency tax. That is how it is dealt with. Recently, lot of people, lot of financial advisors are trying to accept it, because one thing which has happened is the BlackRock ETF, which has collected, I think, $100 billion. Hopefully, Geo BlackRock will launch it in India. So, if a mutual fund were to launch an ETF or a regular fund which invests in bitcoins, I think it will get more popular. But right now in India, there is nothing illegal about it, but it is not legal tender. So I think the skepticism is starting to shift with people like JP Morgan willing to talk about it, and the great Mr. Donald Trump wanting to put it into 401k. Right, if it is included in 401k, you know what it can do to the valuations. So challenges and resistance remain, but then you have. So what are the reasons why there is not great acceptance by financial advisors for a product like this? So first, I think, is tech friction. A lot of big investment advisors, or in terms of size, could be older, so resistance to change could be one thing. Any shift from old to new, there will be some resistance, right? So there's a learning curve to artificial intelligence, how this is done. There is no regulator, there is no issuing authority. We are used to saying, oh, the pound has been issued by the English people, the dollar by the Fed, the rupee by RBI. So there is somebody, you think somebody is taking charge of the quantity to be issued, of what is genuine, what is fake, right? So there is somebody who is controlling all this, so you're more comfortable dealing with it. Here you have no single authority holding it, so that is good and that is bad, right? So it's like gold, there is no single authority, but then there is certified. You can say, okay, this much of purity. So gold, you feel more secure than with, say, Bitcoin. So crypto's user interface has also provided a lot of challenges. Dealing directly with the crypto assets online, hardware, wallets, and seed phrases is not something which is going to be very easy for the common man. Therefore, the ETF or a mutual fund would be a very good route. So the launch of ETF happened, I think, in US in January 2024. So I think if SEBI allows Geo, they may actually sell it in India. That's a good way of entering without thinking too much. You know that you are holding an ETF, and you can see it in your demat statement saying, oh, I got this much of crypto ETF, without getting into details of how it works, right? So then it becomes easier for non-technical people to utilize the technology day to day, but it takes time for all of us to understand all these functionalities. We must also appreciate that there is a using the internet to search is very different from doing something on the digital, something like crypto. Losing money, you don't even know where to go. When you go to the police, he's going to ask, what is this? Right? Is it an asset? Yes. Can you use it as legal tender? No. Is there a regulator for it? No. So I would advise the common man who does not understand to stay away till we actually have an ETF in India. So economic ideology, Bitcoin is a non-state monetary asset. We don't understand a non-state monetary asset. Like I said, we are used to state giving monetary assets, and the and we have no clue how to handle this. So that is one another huge thing. And economic ideology is like political ideology. It takes a long time for things to change, right? India still votes communists in Bengal, or sorry, not in Bengal, in Kerala. And even in the UP election, 1 or 2 seats may have been won by the Communist Party, right? So there is no proof that they will be successful, but people continue to, old habits die hard. So it is deep rooted in me, and it's difficult for me to change, saying here is an asset where I don't know what to do if I get cheated. I don't know how it is held, what is happening, how can I sell, what if there are no buyers. I have no answers to any of these things, right? So financial professionals have far greater bias. At least I'm hugely biased, so I'm very clear that this is large cap, this is mid cap, and this is small cap, and right. So all those things are fixed in my head, so it's very difficult to change. Financial valuation. People like me are used to discounted cash flow. So what is the fair price for any asset that I buy? I have to get back in cash what I paid for at a rate greater than inflation, or I should get a real return. The higher the real return, the smarter is the investment. So I can never understand gold as an investment for a 10-year period or a 20-year period, though I know that I've been wrong, absolutely wrong, and luckily I put some money which has appreciated. And when I look at that fund and it says 41% CAGR, I can't believe it myself, right? But these things have happened in gold. So similarly, things have happened in Bitcoin. A lot of value has been delivered. A lot of people have bought and sold, but I have no clue where to buy it, how to buy it, where to keep it, and what is the redressal mechanism if something goes wrong. If I bought it and I've lost it, then how do I even own it, because it is digitally held? What happens if I lose the password? I have no answer to all this. So investments need valuation techniques. I mean, if I buy real estate, I know how much rent I'm going to get and how much residual value I have. I know I may get 3% return, 4% return, 24% return. I anticipate based on the residual value, which is a guess. In case of Bitcoin, I have no clue. The standard deviation is too high for somebody with a weak heart like me. So it's very difficult. So dividend discount model tells you how to price equity. I have no clue how to price Bitcoin. If I don't know how to price something, I don't know whether it is fairly priced, fully priced, price will go up. I can't buy it just because I think it will go up. That's how I buy gold or silver. It is just technicals, right? There's nothing, no other logic to it. So then in countries like India, you first of all have to question the long-term sustainability of the, let's say, the dollar. You don't know what is going to happen. You don't know how Trump is going to behave, what he's going to do. You know he's dealing with cryptocurrency. You know that he's likely to bring it into 401k. These are all good cues for the market to go up, but I don't know about the regulatory restrictions in India. For example, I know that if I buy and sell, I pay a 30% tax, and this tax cannot be set off against anything else. So if I make a profit somewhere, I mean, if I make a loss somewhere, can I set it off against this? No. This is like lottery winnings, and you can't do anything. There is a 30% TDS. So if you have to get 1 rupee, you will get 70 paise, and that's it. You can't argue about that 30 rupees. It's just gone. So financial professionals are incentivized to promote the products of a company which they are part of, or they manage, or there is some incentive to do that, license to sell. But if Bitcoin is not on that list, it's very unlikely that the financial professional is going to take too much interest in trying to learn about the product and sell it. So if he may have a constructive view on Bitcoin, but the views might be tied. Even if I want to put money, I'd put my money. I'll never put client money on that, because I don't understand. And tomorrow if the client loses money, he's going to wonder whether I took that money or and ran away with it, or whatever it is. So it's a huge problem. So we have to wait for the US response. US response is good. If SEBI gives permission and that ETF is launched in India, there will be a good way for you and me to enter. Otherwise, let me make it very clear. I have zero position in Bitcoin. I don't understand it. I don't think it is a great thing for a retail investor to invest. especially if you don't know what are the redressal mechanisms and problems. For people like me who ask people to put into mutual funds, I'm reasonably sure that SEBI will take some action and make sure that you get justice in a mutual fund, a fair price, a quick withdrawal, money, getting your money within 2 days. All these things are already in place. I have no clue about the regulatory situation of Bitcoin. I can't see anything coming. And also, if you're a young chartered accountant or a CFA, do you want to risk your life dealing with Bitcoin? I really don't know. Then there is performance pressure. The reality is there are numerous reasons why historically it has been Bitcoin is the waviness of the price, right? $200, $2,000. It just makes no sense for people who don't understand this on a day-to-day basis. So what we have to do as a financial advisor is perhaps overcome our own biases while learning about it. There are structural factors that make adoption and support of the financial industry more challenging. It's not just a technological leap, so people have to create, I think there are enough websites to teach you and all that. So go there and learn much before you start investing. Thank you.